All right, so Apple's very interesting point, okay? So this is the 144.50, very, very clearly. Above is bullish, below is bearish. We've gapped down below, but we just tagged 141.67 perfectly, like literally. So is it going to digest here and try and make a run higher? Midterm elections, I don't know. Personally, I'm already bearish, and you know that. So this to me is just a temporary tag right here. It'll probably relieve itself and bounce back up to that 144.50, 145. But next week looks like a continuation rollover. These are very strong weekly candles. They're not going to get resolved. Apple's pretty weak. I'm looking at it on a monthly just to get a little bit of an idea. We did a perfect tag of quarterly to quarterly. Now we're inside, and look at this thing right here. This is called a crossover. Done, right? So I already had mentioned this trend was done here, right here, that gap down, kiss of death, 3 levels of monthly and weekly resistance, and then a gap down, the end, then another gap down. But this is just gorgeous. Tag your it and comes right back down. So now the next level has to break is 138. Apple is in trouble. Remember, last general standing. Can't emphasize this enough. Their earnings report, their cash hoard, their lack of forward guidance are all huge tells. And then the next day, they enact a hiring freeze. And how many, what do you call it, pre-earnings warnings did they give about supply disruptions and demand slowdown? There's nothing bullish except for the fact that it is absolutely huge and everyone has it, right? So it's like a utility stock. But the problem is it's also on the book of every mutual fund, every hedge fund, every passive investment fund, every Swiss National Bank. And it's an asset that can be sold for dollars very, very easily because it's so big and so liquid. And they're selling. And my contention has been, so if they sell Apple, why the hell buy anything else? It depends on your time frame. Sorry. There's nothing here that's bullish on an intraday, by the way. Very weak. Starting to roll over and below 144.50. Let me put this on a monthly just to kind of crash put side of things. There we go. Big picture, once this breaks again, this 138, I mean, literally, we just went all the way from that 157 quarterly down to 138. We're almost there, right? We're so close, but we have to break 138. So I still like the 125, 115, 105. I still like those kind of graduated crash puts. But I did say by end of year, and it could take even into March. That's not a crash. But my point is the crash, if we're going to have a crash, it would be between now and March. So yeah, I don't see any problem with these two kind of air pockets of risk. A normal market, now that this is rolling over, right? Look at this monthly. Okay, it got up and then went sideways. 1, 2, 3, 4, 5 months. 5 months it went sideways from 157 to basically 183, sideways. And then it went to the next channel of support. See how this is a channel of support and this is a channel of support? 1, 2, 3, it got above, woo, didn't stay, lasted a New York minute. The point is it went sideways longer. So I don't know how long it's going to take to get into this next level, but it's going to be soon. Hasn't rolled over on a quarterly though. I mean, this is really, really, really important, this 138. It took a year before it got above, and look how long it could take before it rolls over. So it's tough. Big picture, I'm bearish. But the timing of that, between now and March. And if the rate of change picks up even more, because yields pick up even more, then it could be by end of year. That's the best I can do on direction. I mean, not direction, on timing.